Challenges in implementing a GRC start from the thinking process itself. There can be process related challenges, there can be the thought process itself is a challenge for different banks and financial institutions because they have never been used to being asked questions at the board level. Today, we are seeing that the stakeholders or investors in banks are not normally in sync with the quarterly operations or half yearly operations or reviewing. See, of course, they might be reviewing the results, they might be looking at how the financial performance has been. But during the goal setting exercise, like the famous um, investor who writes a one page letter to his CEOs, as they call it. So now there are people who are starting to ask questions, is that one page letter enough? The one page letter may say I need 20% returns from this to that, I need the market cap of this organization to be go from X to Y. But does that one page letter question how the revenue streams are being designed? How does the institution make a profit? Through which channels? Through what products? Affecting which customers? Affecting which financial markets? I know I am getting into some dangerous area with some very famous personalities. But the fact of the issue is the investors are being cut off from the boards in the sense that they give a one or two line agenda, and after a year you look back at that. By the time the company may not be there. So the beginning of the challenge comes from the person who invests the money. He should not look at it just as a return on his capital invested. He has to look at it from different dimensions, including commitment to the society, including business ethics, including employment, including economy, not merely return on capital. That is the first challenge. The second challenge, which streams out of it, is how much is the board committed to the society. The board is always committed to the investor. Whoever is the majority investor has the majority say in running of the company. Some of them may delegate it 99%, some of them may delegate it 5%, but that's merely the culture of the investor. But the board of directors need to take cognizance of the fact that they are responsible for not only huge amounts of capital which the depositors park with them, but also with the kind of market instability they might create if they do not follow certain basic ethics in their uh, operations. The third challenge might be with respect to the processes the board sets up. See, it is the board which is going to decide the strategy. Board develops the policy procedures, and maybe an audit committee will have an oversight function. And that again is another challenge where the auditors are also seem to be in hand in glove with the management itself, which is very sad. And their independence is being compromised at the cost of business expediency. That is a bigger challenge where there is no oversight function. The regulators do not perform their oversight properly. Their laws itself seem to be triggered more towards policing rather than prompting. All you need is some triggers and alarms. Okay, you look, you're going in the wrong way. Stop it now. Don't go too far. Without that, you impose a huge penalty. Then that kills creativity. So it's a question of the oversight failure, which is another big challenge. It may be outsiders from a regulator point of view, or it can be auditors. See, but the earlier audit function, other than having a statutory perspective, used to have a management audit dimension to it. The auditors, through their knowledge of examining the processes, procedures, policies, how effectively the controls were, used to give the management something called a long form audit report, where it used to say these are the weaknesses, these are the strengths, these are certain ways in which you can overcome these weaknesses. But that has been pushed to the background. That is another challenge. The biggest challenge would be to embrace technology. Many of the GRC challenges arises due to silos created by people, by processes, which can be integrated by technology. This recognition of technology as an enabler rather than a mere supplement to business operations at the board level needs to happen to overcome the GRC challenge.